Good morning, and thank you all for being here. I have a very, very illustrious panel here, and I want to be sure that you have a chance to ask them questions. So we're going to keep our discussion quite brief. I'm the director of the United Nations Joint Staff Pension Fund, and we couldn't get all the United Nations on the map above, but we thought this backdrop might be a good way to put Africa into perspective. It is very big. There are many countries, and it's very hard to spend just one day and cover the entire scope of investment opportunities. The fund I manage consists of about a little over $49 billion. It's the most global pension fund in the world, and we have significant allocations to Africa, which, given the performance of the developed world, has been a strong asset and a good performer in our fund. Our asset allocation is unusual in Africa because, unlike our other portfolios, we have found some of the less liquid investment classes more profitable. We have about 11.2% of all our private equity investments in Africa. It was a great starting point for our private equity initiatives, and I would recommend you take a look there too. Some of our panelists are expert in this area. We're going to allow each of them to speak about 5 minutes about their organizations, and we'd like to start first with Mark Floorman, the Director of Time Partners Limited. I've been asked to ask him first, though, based on his experience, why and how should limited partners and capital owners go about setting and increasing their allocations and deploying capital to Africa?
Good. Thank you very much. Good morning, everyone. I hope you can hear us. We want to make this the best panel of the day, so please come on inside and support us. That was a very good question, and to repeat it, it is how to consider asset allocation, how in fact to increase asset allocation to Africa. And I'd like to set out a 6-point plan, 5 simple points, and then manager selection to be the final one. Just by way of background, I started a private equity fund in Africa called 8 Miles with Bob Geldof, and I sit on the board of the Africa Enterprise Challenge Fund, which is a development fund backed by a number of countries, as well as providing advice to governments and individuals on entering Africa. My first suggestion would be global asset allocation. There are a few principles that I look at when considering asset allocation. And when Africa comes to mind, I don't look at today's Africa. I look at the Africa that we'll see 15 to 20 years from now. And the key factor here is the sheer opportunity, scope, and size of the continent. 1.1 out of 7.2 billion people. But more importantly, many of the youngest people in the world, working hard, striving to succeed, backed by fantastic opportunities in land and natural resources. So the long-term asset allocation I would allocate to Africa is higher than would be indicated by all normal measures. Secondly, I would drop into the regions, and I would allocate in 4 categories: Pan-African, West Africa, East Africa, and Southern. And the reason I say that is that there are some very good Pan-African opportunities which are met by the larger fund managers, but locally, West, East, and Southern, there are very strong SME opportunities which will only be found by managers who are paying attention to those regions. So I would strongly recommend that secondary approach below the continental approach. Thirdly, I would look for an ecosystem that is not only growing, but also is maturing and developing. And what I mean by an ecosystem is a system of government and society, institution building that is supporting long-term business development. And by way of an example, if you look at Nigeria today, what an incredible ecosystem that already exists and that is developing even further, meaning the role of the stock exchange, of leading institutions, of government, of lawyers, accountants, and financial institutions. So the ecosystem, country by country, I think has to be judged. And in some of the asset allocation I am doing, that's something I pay a lot of attention to. Fourthly, I look, and you may find this unusual, at the existence and role of a sovereign wealth fund. And it's great to have on the panel today the chief executive with me here of the Nigerian Sovereign Wealth Fund. This is extremely important because this demonstrates the role of national sovereign capital in the provision of risk capital to local fund managers, to private equity managers and others. And I think having a sovereign wealth fund which is up and running and active and paying its part in society is extremely important to international investors. Fifthly, I would look at the private equity legal and regulatory framework in each country, and I'd want to make sure that it is reasonably sound. For example, a recent development in Mauritius, the new limited partner law, was excellent. But in South Africa, the limited partnership law is not as strong as it could be. And if you take country by country, I think the framework around LP law is extremely important. And I think there are going to be some big strides made on that front in Nigeria soon. So again, I would point to Nigeria as a very good example of where much work is being done. So having done that basic analysis, those 5 steps, all you've got to do is pick your fund manager. And that is relatively easy. I would not be tempted by excessive, enormous, and incredible returns. I've been there, seen that, invested in those. I would look for soundness, consistency, discipline, and do pay attention to the due diligence questionnaire presented by the manager himself. That should be extremely thorough and should answer every question you have. And if a manager doesn't have his own DDQ pack in preparation, that's the first question to ask. Why don't you have that? So I think there are tremendous opportunities, and that would be my 6-point plan for global asset allocation, which should lead to more global capital going to Africa. Thank you.
Well said. I think that's a wonderful introduction. And I think our next speaker, Robert Pouillot, who's the Associate Director of AI Ratings, will have a different take and also emphasizing the importance of governance.
Thanks, Suzanne. I think that I may sound a bit contrarian to what Mark just said, but it's clear that in the aftermath of Kenya and Mali, the Africa premium went up. In other words, the perception of G8 countries about Africa is really going down. And that perception relates directly to high corruption, political instability, and low governance. And that perception basically drives the flows or non-flows or discounted flows to Africa. And I'd like to talk about that, Suzanne. I'd like to refer to the fact that the only way to fight corruption and improve governance is really about using and promoting greater competition to break down the lock of family compact, collusion, and make sure that there is diversity. The other condition is about transparency. There was a reference earlier today concerning research. We need to have more information about those markets. And the issue today, if that perception of Africa is about a continent lumping all the countries together as if they were not different, is a very negative aspect and factor for Africa as such. Therefore, diversity, showing greater transparency is important, and that's what we want to talk about. Competition here is essential to retain a greater share of capital. It's better to have, and regardless of the size of the market, it's better to have more operators, small to middle-sized operators, than to have 2 or 3 or a handful of middle-sized and mega funds. In other words, spread the capital, spread the delegation of management so that we have a liquid market, which is probably a major weakness of Africa today, to attract investment from abroad, as well as to retain domestic investments that, we have to remember that a lot of domestic funds are moving out of the country or the continent. The other aspect is about transparency. Transparency is essential here to improve accountability and to put greater pressure on those operators. If you're trying to diversify, well, make the system more transparent. And generally, the more diversity there is in a market, the more players there are, even though they may be smaller, the governance and transparency will tend to be higher than if you had a concentration of institutions with a lack of liquidity. This is about, and that's why those 2 factors lead us to the proposition that AI is putting on the table here, is how can Africa wash whiter and demonstrate a greater sense of relevance to the international capital market, and as Mark was saying, to raise the attractiveness of the continent. Well, you have to, we believe that by introducing a fiduciary rating of asset managers, i.e. what Mark was referring to, a sort of standardized due diligence of all asset managers that would become public, is an important solution. If we could also rate on the same basis brokers and eventually custodians, we would have a sense of transparency that would show and explain to outside investors as well as to domestic investors how the market operates. And that's what we propose. What is fiduciary rating about? It measures the probability of failing the investor's trust. And by doing so, we measure and evaluate practices instead of past performance. We all know that past performance cannot guarantee future returns. But strangely enough, habits and practices tell a lot about what could happen in the coming months, years, or whatever period you have in mind. So that's what we propose, Suzanne, by improving and by setting a mandatory program of fiduciary rating. I think Africa would distinguish itself vis-a-vis Asia, Latin America, and Eastern Europe.
Well, I think there are already some countries in Africa showing tremendous improvements, and I think there's some lessons that could be learned in this country also, which maybe are overdue. But in fact, you see a lot of U.S. investors now going into Africa, and the Carlyle Group, represented by Norma Kuntz, CFO, is moving very big into Africa with offices across the continent. Africa One has been a successful fund, and I think you're almost closing on your second fund. Can you tell us a bit about the Carlyle Group's activities in Africa?
Sure, thank you. So to start off, I'm the CFO for our Asia-based and Africa-based private equity funds, but I'm actually based in Washington, D.C., responsible for the operations, so not on the ground, so my comments are from that perspective. So Carlyle has been a leader in emerging markets and a first mover among our peers in emerging markets. We entered, Asia in 1998. Now we have both buyout funds and growth funds in Asia. We have funds focused on the Middle East and Northern Africa, which is what Suzanne was referring to. We have funds in Brazil, Mexico, and Peru. We have over 100 investment professionals in these markets right now. So we began analyzing the opportunity in sub-Saharan Africa many years ago. And to that end, we identified a strong team of local professionals that have the skill set we believe to build the fund. So the Carlyle strategy in all the markets that we go into has been consistent, which is to identify the opportunity and then identify local partners, hand-select local partners that we believe can launch that strategy. So we believe local teams with local professional networks and knowledge of customs and how to get things done, practices, are critical to the success in any new market. They have intimate knowledge of the markets, and they're able to source, diligence, and manage the businesses that we invest in. Our first fund in sub-Saharan Africa will operate out of Johannesburg and Nigeria. We think that gives our teams the best access to the 8 to 10 target countries in sub-Saharan Africa that the fund will focus on. As the portfolio develops, the team may expand to open an office in East Africa to provide additional support in the region. The strategy of the fund is to focus primarily on the growth of the region, which we believe will result in expansion of a consumer middle class in the target markets. And the fund will focus on businesses that can benefit from that growth, such as fast-moving consumer products, transportation and logistics, consumer and commercial banking, as well as downstream oil and gas mining services. The cornerstone of the Carlyle model is to support the local teams with the investment professionals around the globe. Carlyle has over 650 investment professionals and 24 operating executives. The operating executives are available for consultation on areas such as specific industries, international markets, and sourcing top-class management teams to help grow our companies. We refer to this as the One Carlyle approach, and to what my colleagues have said, we hope that the One Carlyle approach brings a disciplined approach to investing in sub-Saharan Africa. Carlyle has $180 billion invested in 118 active funds and 81 fund-of-funds across the globe. We have completed close to 460 private equity transactions around the world, and we're excited to now be in Africa. We've completed our first investment in the Sub-Saharan Africa Fund and are close to completion on our second. We're optimistic that we'll continue to grow our presence in the region as our current fund matures.
Thank you so much. And speaking of new investors, we have the CEO of the Nigerian Sovereign Investment Authority as our next speaker, Uche Orji. And I wonder, there's so much enthusiasm and talk about your new institution and the fact that you're starting to invest in Nigeria and Africa and globally. Can you tell us about your strategy and some of the opportunities you see in the pipeline?
Sure. Well, thank you very much. I will describe our strategy by describing each of the 4 or 3 funds that are part of the NSIA. The NSIA stands for Nigeria Sovereign Investment Authority. We've been in operations for just about 11 months. The board was inaugurated on October 9th, 2012, with a mandate to run 3 funds across slightly different strategies. The first fund is a fund described as a stabilization fund. The second one is a Future Generations Fund, and the third is a Nigeria Infrastructure Fund. At the moment, we have $1 billion of seed capital, which I quite frankly believe, if you contextualize that alongside other sovereign wealth funds at the times when they started, it's not inconsequential. The law as is stipulated, and luckily we have in the room here the finance minister at the time when the law was written, is such that we have fairly optimistic views as to how the fund will grow over time. So let me describe each of the funds, and then I can tell you where we are, and then from there we can distill what the strategies are. The Stabilization Fund was set up purely to provide stabilization support for the government in times of economic need. And so we have chosen a strategy to invest this in safe liquid assets, and that fund is fully invested now. We have selected managers for that and funded those managers already. The 3 managers we selected were Goldman Sachs Asset Management, Credit Suisse Asset Management, and UBS. Fairly simple strategy, 25% in treasuries and 75% in investment-grade corporate bonds. Again, remember, the emphasis here is liquidity and safety for that fund. Now, the second fund is targeted at, it's a savings fund that is aimed at achieving a certain returns profile. Again, unlike most other funds, we do not have a specific payout over time. So this is just about savings and accumulating a certain returns target. We are targeting CPI plus 400 basis points return here, and the asset allocation has been published across various asset classes. The one thing you might notice when you look at our initial strategic allocation for this year is a slightly higher weight to emerging market equities than you'll find developed markets. 10% developed markets equities, 15% emerging markets, and this is a reflection of where we see value today. The first 2 funds, both the Stabilization and the Future Generations Fund, will be outsourced. We're currently in the process of manager selection for the Future Generations Fund, and we're hoping that we can complete that process before the end of the first half of 2014 and have that also fully invested and start looking at performance from that for that fund. Now, it gets more interesting when you look at the Infrastructure Fund. The infrastructure fund will be managed in-house. And the reason is very simple. Within the country, we haven't seen that many local infrastructure funds, and we're hoping that the creation of the NSIA will be a catalyst for this sector to grow. We have finished our asset investment policy statements for all three funds, obviously, and we have also narrowed down to the specific sectors where we think the infrastructure fund will play a role. The first sector is in toll roads, where we have seen interesting opportunities in the country. We've also identified power, healthcare, transportation, and aviation as some of the early areas where we think that there is clear opportunities. Now, there are a few things happening in Nigeria which I think you must know. There's been a lot of reform, one of which, obviously, is the creation of the Sovereign Wealth Fund, which I think you should all remember is first and foremost a tool of fiscal discipline. The history of the country through the management of the excess revenues from crude oil has been, not what you will be very, things I think we could have done better. But I think finally, having seen the creation of the Sovereign Wealth Fund, I think a lot of that has culminated in what I think is the first legally accepted vehicle for managing these excess revenues. And I think a lot of work has gone through that, and credit must be given to everybody who worked hard to make that reality. From here onwards, we expect that over time, this will be part of the reflection of all the reform programs that we see in Africa. And Robert, I take your point about what's happening in Africa, but I think I choose to look at it from a point of view of glass half full as opposed to glass half empty. And you're seeing that reflected in things like the yields that our bonds are attracting in foreign markets today. The yields are mid-single digits, which were much better than they would have been 10, 15 years ago. So a lot of all this makes us very optimistic as to what the infrastructure fund can achieve. And there are three things I think we expect this fund to achieve. Number one, as the reform program moves into the establishment of PPP programs, we expect to play a significant role there, and that's what we expect our fund to do. Number two, we also expect our fund to be a conduit that makes it easy for some of you who want to invest in Nigeria. You're looking for partners, the NSIA is there as a partner for you. Because we have taken an approach with the infrastructure fund of looking at critical partners we can work with. The first partnership we signed up was with General Electric, looking at power, aviation, healthcare, and transport. That partnership, I'm happy to report, will be resulting in in a couple of areas of investment within the next few months. We also signed up, obviously, with IFC and AFC, you know about that, and then there's a fourth fund here in the US we've just signed up recently. Soon that will be made public. The idea here is we will co-invest in projects with some of these funds as well as with General Electric in the areas that I mentioned. And I think that provides a template for how many of you that want to invest in Nigeria will invest. The target return for this fund, is kept at the level where I think is still interesting enough for some of you. Is US CPI plus 500 basis points is the minimum return we expect for the areas that we are looking to invest for the infrastructure fund. So I would just say, the strategy is very simple. The investment philosophy here, unlike most of the sovereign wealth funds, we've signed up to Santiago principles, which means we are transparent and we're independent in so many respects. There's a law that has set up this fund, which I think in many ways also goes on to guarantee the independence that we are talking about for the NSIA. We view ourselves as a public sector entity with a private sector philosophy, and I think in many ways that's reflecting the team we've built and the way we've outlined the strategies. So manager selection ongoing today for the Future Generations Fund, Stabilization Fund completely invested already, and Infrastructure Fund, hopefully we should announce a couple of commitments before the year is out. It's exciting times in Nigeria. There's been a lot of reform. And again, I think it's easy to look at some of the things that have led to the risk premium rising recently, but take the long view. Take the long view, and the opportunities are really, really interesting. Recently, we've just concluded a significant sale of power assets, one of the biggest privatization programs ever in the history of Africa. And that, I think, so far from the records we see, look very successful. There are opportunities there to invest. Within power, we see specifically areas that are still yet untouched, like transmission, where I think there's opportunity there for investors to partner with the NSIA. So I'll stop here, but I think we're very excited about what's happening in Nigeria, and we're excited about the role that we expect the NSIA to play in the infrastructure investment sector for Nigeria.
Thank you so much. That was so inspiring. I'm very happy to see how quickly you've moved this fund forward. Our next speaker, Julian Chen, Vice President, Gezuba Group International, is a major investor in Africa. And I would like to ask the question, what is the Chinese sovereign investment approach, and what is your interest in Africa's capital market opportunities?
Okay, thank you. Hi, everyone. So time really flies. So when the first speaker started this section, he said good morning to everyone. Now I have to say good afternoon to everybody. So now you know China is big investor or so big constructors in Africa. We should have somebody to speak here, not only on behalf of China, but we should say to express what we have done in Africa. So first of all, I traveled to many African countries, mostly for business purposes. So with my personal experience, I positively believe that there is great potential for people to invest and conduct business in Africa. I think it is a wise strategy and action to invest in Africa, which not only benefits the African local people, but also the investors themselves in the short term and the longer term. So I have to introduce myself first. So I served in 2 large enterprises owned by the China central government as a top management for 26 years. So one is China Cordoba Group. So when we pronounce Cordoba, it may be difficult for you to remember, but everybody should know China has the largest hydropower station in the world. That is the Three Gorges Dam. Three Gorges Dam was built by our company. So our company has 4,000 enterprises, 4,000 projects in Africa, in the world, mainly in Africa. So we have 15,600 employees working overseas for the projects, and most of them are working in Africa. So and also we did quite a few significant construction projects in Africa, which are regarded as the symbol of energetic Sino-African cooperation and partnership, including the 3rd largest bridge in Bamako, Africa's highest double curvature arc dam in Ethiopia, and Tekerzi hydropower station dam in Ethiopia, etc. So those impressive construction projects contribute to Africa's social-economic sustainable development. As a member of the senior management of Cordoba Group, I personally have a strong emotional attachment to Africa and its development. So from my personal perspective, Africa is rich in natural resources, including mining and oil, lower power, in labor. In recent years, its economy is developing rapidly, and its political stability experienced improvement. I have personally communicated with top leaders in many African countries, including some president and vice presidents in some African countries. So they have demonstrated broad minds and open thinking. Also, the social security, business environment, and foreign exchange systems in Africa have progressively significant. So all those factors build a good foundation for foreign investment. As a matter of fact, not only China state-owned enterprises such as Cordoba, but also my business friends who have invested in Africa have the strong willing to continue their investment in Africa, which is encouraged by the good return from their investment in Africa. So now I own my own investment company headquartered in Beijing, China. So my current business focuses upon the energy, mining sectors, and the international capital operations. We have over 20 subsidiaries and holding companies in China and other countries. We have successfully helped HiMo Technology Group of China, one of China's largest listed energy companies, to acquire shale oil fields owned by Carrizo, a listed oil company in the United States in 2012. So, which is a multi-million dollars transaction. We have recently acquired a listed Australian energy company which possesses various high-quality assets in Australia and South America. The transfer value of one of its mining field exceeds $500 million US. So with this platform, I think I should have a lot of interest and opportunity to make investment into Africa, based on the China's sovereign investment. So talking about China's sovereign investment into Africa, I think there are many ways. First of all, we have the Import and Export Bank of China. We also have the National Development Bank of China. We have we have China Africa Development Fund, which called CAF. All these are good tools and ways to be used for investment in Africa. So take Global Group, for example. So when we have a project in Africa, we may introduce such kind of financial institutions to arrange the fund for the construction. So we need the local government to provide a sovereign guarantee. As a matter of fact, all these projects in Africa, we do like this way. So I think we have a lot of opportunities to continue our investment in Africa. Thank you all.
Thank you. That's a very different perspective. And we have our final speaker, who I know because we've invested with him. This is a matter of public record. Gavin Wilson, CEO of the IFC Asset Management Company. And I would like Gavin to tell us how IFC invests in Africa and the different opportunities for limited partners to participate.
Okay, Suzanne, thank you very much. Apologies for being late, and thank you, AI, for inviting me to join the panel. IFC's mandate is to promote private sector development in all developing countries. We do that through investing in private enterprise, whether it be by lending or investing equity. And we do that across the world, across the developing world. It's instructive to look at the share of our business that is accounted for by sub-Saharan Africa. If you go back 10 years, we would have invested we did invest about $100 million in sub-Saharan Africa. That was less than 5% of what we did globally. If you look at the last fiscal year, which for us ends on June 30th, so the one that has just ended, we invested across the world about $18 billion for our own account, of which more than 20% was in sub-Saharan Africa. In other words, about $3.5 billion. So in 10 years, we've gone from an annual investment commitment volume of 100 million to 3.5 billion. And if you add on to that, sort of mobilizing other people's capital alongside us in IFC investments in sub-Saharan Africa, the number is more like 5.5 billion across about 135 different investments during the last fiscal year. So I think the first message is that for us, sub-Saharan Africa is much more important for our business than it ever has been before. We have decentralized generally, but specifically in Africa, we now have 23 different offices. We have 3 regional hubs in Dakar, Nairobi, Johannesburg, but also 20 other locations as well. And we find that this is absolutely critical, particularly in 2 respects. One is on the origination side, in terms of being in the flow of what's actually happening in the marketplace, establishing relationships with entrepreneurs, with industrialists, with local government officials, with foreign investors focused on that particular market, with other private equity investors, but also, and almost more importantly, frankly, is on the portfolio side. So once we've made an investment, by being actually physically there, it is a lot easier for us to interact with our portfolio companies, add value to the extent we can, and really be much more aware of what's going on. What type of investor are we? We are a growth equity investor. We do not do controlled transactions. We are not a buyout fund. We provide growth capital for growing companies and ideally in growing economies. So the growth that we have seen on the continent over the last 10 years is obviously one of the driving forces to the increased opportunity we've had to actually put money to work in Africa. I mentioned some of the statistics about IFC's own account investing. What we decided to do about 5 years ago was create a platform to allow third-party capital to invest alongside IFC. And rather than doing it sort of deal by deal, as we've done for many years on the debt side, where we, in many cases, syndicate our debt transactions. On the equity side, we decided to set it up in the form of a classic private equity platform, GPLP structure, with a number of different funds that focus, each fund would focus on a particular sector or region. We set up that business now 4 years ago. That's the business I run. We've raised so far $6 billion of capital. We think this is a good start. We haven't yet sort of covered the waterfront in terms of IFC's business around the world, but what we have done is had an initial focus on Africa. So our first regional fund, the one that Suzanne alluded to a bit earlier, is a fund that focuses cross-sector equity and quasi-equity in both Africa and Latin America. The objective being roughly 50-50 between the two, relatively unusual sort of geographic pairing. We felt that gave us the critical mass to raise a $1 billion fund, which is the size of the fund. And that fund is now about kind of 65% invested. In the same time, we have raised a fund focused specifically on the African banking sector, which does nothing else except invest in African banks. I think one or two portfolio investee companies may be represented here today. And that has done extremely well. We think the banking sector is very attractive. I think we all know some of the statistics about the low rates of access to finance, but also just generally in terms of banking penetration within most African countries is still very low. So I think that, you know, from the perspective of any public policy makers in the room, what I would say is that whilst there's been a lot of focus on, in a sense, reining in banks in the developed world, trying to reduce leverage, trying to reduce risk-taking, it remains the fact that in the developing world, and particularly in Africa, banking penetration, as in other words, banking assets as a percent of total GDP, which is the traditional way of measuring that, is extremely low. And it is very important for sustainable long-term economic growth to have deep local markets. But even before you get to liquid capital markets, you need to have a strong, robust banking sector that is able to finance growth. So we invest in banks, we lend to banks with specific criteria in terms of to which sectors those loans should be on lent. And we think this is both a driver of future growth in Africa, as well as an extremely good investment proposition in the meantime, if you want to get exposure to a broad cross-section of African commerce and industry. I'll leave it there for the moment.
Okay, thank you, Gavin. I think we've used up our time, but I did want one more question. Mark Floorman had been discussing before our meeting some of the asset allocation questions, and I wanted him just to continue briefly on that subject.
Okay, thank you very much. Well, just to wrap up, because I know we're at the end of our time, but six-point plan in terms of global asset allocation would lead, I think, to a greater weighting towards Africa, in particular if you take into account the next 10 to 20 years. And I think what we've heard today on the panel is a number of comments about the importance of an ecosystem, a thriving economy, and financial inclusion, i.e. the provision of more individuals, companies, and families coming into the banking net. And I think, in particular, as His Excellency Minister Aganga is here and is speaking next, it's worth noting that as we spoke then about regional allocation within Africa, I think certain hubs are going to emerge. Ignoring the north, I would imagine that Nigeria, Kenya, and South Africa are the principal emerging hubs for my particular industry, which is private equity and venture capital. And a lot is going on in each of those countries in order to develop an appropriate, full legal and regulatory framework. And you'll see also that, of course, sovereign wealth exists in each of those areas, which is one of the 6 measures that I had. So I think if I was in charge of billions and billions of sovereign wealth capital, I would weight favorably sub-Saharan Africa at the moment. And I'd look beyond some of the obvious issues that are being discussed, but to get that allocation in soon, because those decisions that you're going to be making on allocations will last 5 to 15 years. And I think this is therefore a great year to recommit to Africa. Thank you very much.
Do we have time for some questions? Okay, good. Well, the floor may raise hands. Do we have any questions? Okay. Yes, sir.
So my name is Benga. I run a social enterprise that is dedicated to creating work opportunities for Africans. So I was wondering if you all, particularly Mr. Julian Chen, can elaborate on your company's strategy for engaging local talents in Africa, be it overseas or on the ground. And anybody else on the panel can also chime in, but particularly I think it would be great to listen to your strategy around local talent engagement of your investment opportunities in Africa.
Mr. Chen, can you elaborate on what your company does to encourage employment opportunities in Africa?
Okay. First of all, I have to add about the sovereign investment in Africa, which I think it is a very good platform for the African people to use. You can see the fact we made a lot of investment, have a lot of projects in Africa with sovereign, financial support. But several years later, you will find another situation or scenario. So the government or the governmental organizations will sign the contract with your government to say, hey, so you don't need to pay now. Originally, you want to, so the loan, for example, you have to pay how much the principal and the interest. And several years later, they will say you don't need to pay not only interest, even the principal. I think so. You use this platform to build a to build the projects such as the dam, the water treatment, facilities, etc. And everything will be left in Africa. As for my own, so answer your question, my own business, I have, I think I can do 2 issues. One issue, I can use my my Australian listed company, the LISCO, to acquire the mining and oil field. So that was my advantages. So I may introduce to you myself. As a matter of fact, I was working with another company which is called China National Aviation Fuel Corporation, which is so Fortune top 500 company, ranked 277 in the world, and so I built the listed company in Singapore, so I have my experience really to use another listed company to do such kind of business. If somebody have a good project in the mining area and oil area, please contact me. I can do something really. Another area I can do, because I have been working with the China central government owned enterprises for 26 years. So I have a lot of contacts or relations with such kind of channels. So on that basis, so I can introduce the powerful companies and firms, not only in the central government-owned area, but also the private sectors, to Singapore to make their investment. Okay, thank you very much.
Thank you very much. I believe we have one more question. Time for one more question? Let's see, that third table back. See somebody. Yes, sir.
My name is Koafezi from Ghana. I want to ask a very simple question, looking at it from return and risk. Having invested in Sub-Saharan Africa and other areas, in terms of return, where are you getting the best returns? And what's your biggest risk, the challenge? And to Uche for Nigeria, are you investing in Africa, or you're just investing all outside?
Should I go first?
Yes. Start with Nigeria, and then we'll go.
Sure. Yes, we're investing in Nigeria. The infrastructure fund is called the Nigeria Infrastructure Fund, and the last time I checked, Nigeria is part of Africa. But the exact allocation to that fund is currently 32.5% of that fund is focused on the infrastructure fund, which is, obviously, like I said, is specific to Nigeria. Now, the Future Generations Fund is also has an allocation to emerging markets, and that obviously includes Africa. Now, we're looking at that to pick managers who will invest, both Pan-African as well as specific to Nigeria. So we are still in the early stages of that manager selection process, but yes, the emerging market allocation will include Africa. But so outside of those two funds, the stabilization fund is invested purely within our intervention currency, which as of today focuses on developed markets. So, compared to other sovereign wealth funds, I think we have an outsized allocation to the domestic market, through the infrastructure fund, and also, through the emerging market allocation in the Future Generations Fund, we'll be investing domestically. But it's just the first billion, it's just a seed capital. Again, the asset allocation is something that's reviewed periodically. And in my remarks, I also said that we saw more opportunity in emerging markets than we saw in developed markets, which is why we're 15% allocated there versus developed markets. So yes, we are. The short answer to your question is yes, we are, and it's mandated of us by the law to do so.
Do you have another question? This front table?
Yes, please.
Mine is a quick one. My name is Richard Biaragaba. I'm from Uganda. We too have discovered oil, and one of the things we're thinking about is a sovereign fund. What would you give advice to a country like us that would like to set up a sovereign fund?
Sure. Maybe I'll give a nod to Minister Ganga here, who set up largely Nigeria Sovereign Investment Authority. The first thing you do is get a law. Make sure there's a strong legal backing to your fund. Don't make it an administrative arrangement. Make sure there's a law. And the reason I say that is because needs change, people will evolve, and then if you don't have a strong legal backing, you'll start to have a style drift. The actual implementation of a sovereign wealth fund is probably more complicated than you will see from outside, and the reason is because of the competing nature of people you report to. We went about it in 3 clear stages. Stage 1, choose a custodian. Choose a custodian that you really trust, and I can tell you something. It's probably it sounds simple, but it could take you as much as 6 months to negotiate a custody agreement. It's that complicated. Get yourself a good investment advisor, which was one of the things we did as well fairly early on. Because when you start, you have no resources, you don't have really a lot of infrastructure, there's things you have to build. And then make sure all your processes are in place, because what gets you in a sovereign wealth fund is not whether you made money or lost money. It's more whether you had a process and whether you followed that process. Those are the 3 clear things. And the 4th thing, you have to focus on is make sure that, you have clear asset allocation, ring-fence funds. And I think, I studied many of my peer group companies, and I think, I'm not trying to blow our own trumpet, but I think ours is very well set up in terms of the legal backings, and I think you can learn from that. You tend to have, mission drift within sovereign wealth funds. One day they're doing this, the next they're doing a different thing, and this is kind of one of the things that causes challenges. My sense is you try and make sure that you're focused on what you're doing, but it's fairly easy, frankly.
Thank you so much. I think we are going to adjourn now, and I appreciate your attention, and I thank all our wonderful panelists for a brief view of the rich opportunities to invest in Africa. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.